Okay, so I'm going to go over the healthcare finance portfolio project and some of the things that you'll need to know in order to complete that. So, an introduction to healthcare finance. For this, I just really want you to, I'm hoping that maybe you all have had at least accounting principles 1 and 2, maybe a finance class, so none of this is really new. But in terms of finance related to healthcare, um, healthcare finance refers to the management of financial resources in healthcare organizations, ensuring that funds are allocated effectively to provide quality care while maintaining fiscal responsibility. And the importance of this is understanding financial management in healthcare is crucial because it allows organizations to balance patient care with financial stability. And some key concepts for you to understand for accounting is you have the accrual versus cash accounting, and accrual accounting is revenue and expenses that are recorded when earned or accrued regardless of cash flow. And this method is often used in larger healthcare institutions or larger organizations overall. And then the revenue cycle, you have revenue cycle management. And this is a process through which healthcare providers capture, manage, and collect payments for services provided. And this includes billing, insurance claims, and payment collection. And there are some key ratios whenever you talk about just finance in general and looking at how well an organization is doing, not per se the accounting part of it. And that's just the debits, the credits, the owner's equity accounts, and things like that. So in finance, you have ratios, and these ratios help healthcare managers evaluate their organization's financial health. And you have liquidity ratios, and these measure the ability of an organization to meet short-term obligations. So a current ratio is a liquidity ratio, and an acid test ratio or a quick ratio are liquidity ratios. So the current ratio is the current assets divided by current liabilities, and its significance is a ratio above 1 suggests the organization has sufficient short-term assets to cover its liabilities. In healthcare, this indicates whether a hospital can pay its bills or fund immediate patient care costs. So if it's 2, that means they have twice the amount. So on and so forth. 3, triple, 4, quadruple. The quick ratio, the formula is current assets minus their inventory divided by their current liabilities. And this excludes inventory from assets, focusing on more liquid assets. And a ratio greater than 1 indicates good short-term financial health. And you have profitability ratios. These ratios evaluate an organization's ability to generate profit. And the ratios that are profitability ratios are operating margin and net margin. The formula for operating margin is operating income divided by total revenue. And in healthcare, a higher operating margin shows that the organization can efficiently generate profit from its core activities like patient care. And then the net margin formula is net income divided by total revenue. And it shows the overall profitability of the healthcare provider after all expenses, including taxes and interest. Then you have efficiency ratios, and they are asset turnover and days in accounts receivable. The asset turnover formula is total revenue divided by total assets, and it indicates how effectively a healthcare organization is using its assets to generate revenue. And a higher ratio means assets are being used efficiently. The days, excuse me, the days in accounts receivable, the formula is accounts receivable divided by total revenue times 365. So you're measuring it based on days, and it measures the average time it takes for a healthcare provider to collect payments. A higher number suggests inefficiencies in billing or collections. You do not want this money um, to be sitting out there. You don't want your accounts receivables to be sitting out there for a long period of time, or it shows that you're essentially not bringing in the money that needs to be brought in to support something. And then you have leverage ratios, which are debt to equity ratio and debt service coverage ratio. And these ratios indicate how much debt a healthcare organization uses to finance its operations. The formula for the debt to equity ratio is total debt over total equity. And a high debt to equity ratio means an organization is highly leveraged and potentially increasing financial risk. Then the debt service coverage ratio formula is EBITDA divided by the debt service. Um, it measures an organization's ability to meet its debt obligations from operating income, and a ratio of 1 or higher is ideal. So, accounting decisions in healthcare, you have to consider cost allocation, and healthcare organizations need to decide how to allocate their costs between different departments, such as surgery versus emergency room. And this decision affects both financial reporting and decision making, and a direct versus indirect costs. Direct costs, for example, are supplies used in surgery, can be directly attributed to services, while indirect costs, such as administration expenses, need to be allocated across the organization. Then there's depreciation methods. Healthcare institutions often invest in expensive equipment. So the choice of depreciation method, whether it's straight line or declining, affects financial statements and tax liabilities. So straight line depreciation evenly spreads the cost of an asset over its full life, and a declining balance depreciation accelerates depreciation, which can result in lower profits in the early years of an asset's life, but it provides tax benefits. The revenue recognition, healthcare providers can often receive payments from multiple sources, such as insurance companies and patients. Deciding when to recognize revenue, so when services are provided or when payment is received, is crucial for accurate financial reporting. So in conclusion, and for, I guess, practical application, the importance of ratios is they provide healthcare executives with insights into the organization's financial health, guiding important decisions on budgeting, investments, and cost control. And the impact of financial decisions are sound accounting decisions that allow healthcare organizations to provide high quality care, maintain financial stability, and adapt to changing regulations or market conditions. And then finally, effective healthcare finance involves balancing the mission of providing patient care with the realities of financial management. And by using appropriate financial ratios and market-informed accounting decisions, healthcare leaders can help their organizations thrive financially while maintaining a focus on quality patient outcomes. If you have not had any sort of accounting or finance course, um, during your time at in school. I wouldn't say put your education on hold to do that. Um, but I would suggest familiarizing yourself with a few things. And that's kind of what this assignment is really all about. It's just kind of letting you see the financial picture. So whenever you are put on a project, you have to take certain things into consideration, where the money is going, where it's not coming in, um, and if there are any issues with a project that need to be changed. So I hope this helps. Um, there are several parts to this assignment in particular. And it has four things that you have to submit with it, and those are all listed in Blackboard. And I really hope that you all kind of enjoy doing this. As a former accountant, I enjoy doing this kind of stuff. I know it's weird, but yes, I do. Um, and if you have any questions or you need more clarifying information, please email me. I've tried to put everything in Blackboard um, with the assignment that regarding questions I've had in the past, and I'm always fine tuning stuff because someone always has an additional question. So if you have anything that you need to ask, then please do not hesitate to email me because I want you to do well on this and understand it. All right. So I'll see you guys later. Also, this is not due until March 30th, which I know is the last day after spring break. But I wanted to be able to give you guys a little bit of extra time to work on it because there are so many parts to it. But if you have a little bit of difficulty, email me if you have trips or whatever planned. Email me and I'll look at seeing about giving extra time. Um, it might affect how many um, days you're allowed to have for other assignments, but there are a couple that are super short anyway. So um, coming up. And then I think the last one that we do is a statistics, and it'll be a little more lengthy as well. But I think that going forward with the portfolio assignments that shouldn't um, interfere with working on two things at a time. So if you have any questions, email me um, as soon as you have them. If you email me and you figure out what it is you need, email me again and just say, hey, I figured it out, and you'll be all good. All right, see you guys later and have a good spring break.